Normally on these Saturdays, I'm giving you the news from the past week, but this Saturday has to be a little different because earlier this week, I actually just got married. And so when this video comes out, I'll actually be on my honeymoon. So I wanted to give you something else that you've been asking for. And that's an update on my portfolio mid-year here in July of 2025. I've made a couple of big changes here in the portfolio. And so I hope this helps you so that you can see what I'm doing, and that'll help inform your research and maybe put together a great portfolio for yourself. I'm going to break down all of the percentages of my portfolio and give you each and every ETF, stock, cryptocurrency, every little piece so that you can have a full understanding of what I'm invested in. I'm also going to give you my thoughts on where the rest of this year is going in the stock market and how I'm going to invest specifically, and it's probably a bit different than what you're expecting. Let's get right to it. My name is Nolan Govea, my students call me Professor G, and I made this channel to make investing simplified. So first is the overall buildup of my portfolio. I always tell my personal investing clients that investing in equities is great, but eventually you're going to want to have a couple of different asset classes within your portfolio. I recommend at least 3, but 5 would be amazing. Different assets to invest in would be equities or ETFs/stocks, commodities like gold and silver, real estate, cryptocurrency, bonds or cash equivalents, business equity, and then alternatives like paintings or reselling sneakers or collectible cars. The goal is to have multiple types of appreciating assets, because if one asset class gets hit hard in a recession or something, the other types could keep you afloat. My personal portfolio has physical real estate, equities, cash and cash equivalents, crypto, and business equity. For this illustration and for this video, I'm going to omit the whole part about the business equity because it's kind of confusing. I have a couple of different businesses and I don't really want that to take up the portion of what I'm trying to get across to you. Though business income is definitely my main wealth driver, and through my multiple businesses, I do have about 6 streams of income, which I can go over in a different video if that's something that you're interested in. So within the other 4 asset classes, this is what my portfolio looks like. My high yield savings account / brokerage money market is about 5% of the whole portfolio. Physical real estate, which is 2 houses, is 29% of the portfolio. Crypto's 11%, and then ETF/stocks is 55%. And I'm interested to hear your portfolio breakdown. Go ahead and comment that down below so we can show each other the different types of things that people invest in and give people a good idea so that they could maybe try that out. So now I'm going to dive deeper into each one of those 4 categories so you can have a better idea of exactly what I'm doing in each. So first is definitely the most simple, and that's my high yield savings account and brokerage money market account. This is also arguably the most important. To be a very solid, smart investor, you need to have an emergency fund and you need to have some cash off to the side just in case something crazy happens in the stock market or your other asset classes where everything drops, and at least you have a portion that's nice and safe. I always recommend having at least 3 months worth of living expenses. Now, I personally have a good solid job as a university professor, and then I also have a couple of businesses, so my income is pretty stable and pretty solid. If I only had one job, I'd want at least 6 months of living expenses for someone my age, but for me, I feel fine with 3 months. I stash that in a high yield savings account at Capital One because that's an easy and safe platform. I also hold some cash in the money market in my investing account. This cash is for any dip that might happen in the market, and that's probably going to happen here in 2025, which I'm going to go over near the end of this video. But just know that I have a portion of that cash in a high yield savings account, and that's pretty much just my emergency fund. I just don't ever touch that. Then the other portion of cash in the money market is for use down the road, but for now it's just holding it there just in case a dip comes. Next is the physical real estate. I have 1 rental property along with my primary residence. The rental property that I own is a long-term rental, and I've owned it for about 5 years now, and it's a great source of cash flow. In the time that I've owned that home, it's appreciated about $200,000, and the people that have been renting it out have paid down my mortgage of around $100,000. Real estate definitely can be a headache. I have had those calls first thing in the morning where the sprinklers just don't turn off, or there's a flood of some sort, or something breaks and you have to go and fix it right away. But it has appreciated or given me equity of about $300,000 in about 5 years, so I am excited about that. Next is crypto, and my crypto is mostly Bitcoin. I bought a bunch of different cryptocurrencies back when I first learned about it in 2016, And since then, I've been doing deep dives into the whole industry, and really what I'm seeing is that I really believe in Bitcoin long term, I kind of believe in Ethereum, the rest of them are just up in the air and they're just too much of a risk for me at this point. I believe with all the craziness surrounding the de-dollarization worldwide and with crazy unsustainable inflation and money printing, Bitcoin makes more and more sense long term. My crypto portfolio looks like this: 80% Bitcoin, 12% Ethereum, 5% Cardano, 3% in XRP, Chainlink, Matic, and VeChain. Now for the biggest portion of my portfolio, which is my ETFs and stocks. I have a 403b through my university, I have a Roth IRA that I do backdoor Roth conversions each year, I have a solo 401k through my business, and then I have a taxable brokerage. At this point, my retirement accounts equal out to about 64% of my equities portfolio, and my taxable brokerage makes up about 36% of my portfolio. I'm going to lump everything together here so that I can just show you and explain to you fully what my positions are, because it does get a little weird in between each different account. So I'm just going to put all of those together. My largest holding overall is the S&P 500. That's the thing that I have the most exposure to, basically because the 403b through my university has terrible options, and the only one that had a pretty low fee but has great solid performance is the S&P 500. So my 403b is 100% S&P 500. So overall in this section, the S&P 500 makes up 42% in the form of mutual funds from the 403b and then VU in other places. Then for my safer portion, or the dividend/value section, this makes up 26%. SCHD is my biggest holding here at 22% of the entire portfolio, and then the other 4% is made up of Berkshire Hathaway. I consider Berkshire a value style investing just because the beta is actually lower than the S&P 500 and it's been solid and sustainable for the life of the company. It's also becoming my largest individual stock holding by far in my portfolio. For the growth portion of the portfolio, this makes up 32%. I have SCHG at 12%, QQQM at 12%, and then I hold various stocks at the final 8%. In order of largest holding to smallest, I have Microsoft, Apple, Palantir, Google, SoFi, and most recently, APLD. If you notice, in my portfolio, I practice exactly what I preach to you guys every single week. I keep it to 3 categories: foundational, value, and growth. I stick to 85 to 90% ETF investing with a smaller portion of the portfolio in individual stocks. I mix in some riskier stocks with some blue chip stocks. And most importantly, I built out an overall portfolio mix that makes the most sense with my risk tolerance, my personality, my goals, and kept in mind the other assets I have in order to not add too much risk. If you hold something like 30% of your entire portfolio in cryptocurrency or something that's quite speculative, and then in just the stock portion of your portfolio you have 50 or 60% in growth stocks or something speculative there, you have to add those together and just look at it and say, wow, overall I have a lot more risk than anything else. And so make sure to look at everything, not just your stock portfolio or just your crypto portfolio. So now looking forward to the rest of the year. The reason why I'm holding a small portion of my cash in the money market, like I was talking about from before, is because this year we're still not out of the woods yet. We likely have many more instances of bad news coming with the trade wars, actual wars worldwide, tariffs, and much, much more. I believe that the rest of 2025 will be rocky, but we are definitely setting up for a very solid and probably highly profitable 2026 and definitely 2027. For this reason, I do want to get all of my investable amount of money invested by 2026, just not necessarily today. Knowing there may be more bad news coming, I think we will see 4 to 5 more dips in these next months. When a dip happens of 3 to 5% or more, I'm going to allocate a portion of that money in the money market account. If it dips 5%, I'll throw in 25% of that money. If it dips 10% or more, I'll likely throw in almost all of it, honestly. We've seen this year how it goes. Big dip from emotional decision making, and then within months, the market is corrected. I think we're going to see more of the same, and so those of you that invest while others are scared will be the ones to win. On top of that though, I'm going to be dollar cost averaging every single month no matter what, even at highest highs. With my investable amount of money each and every month, I'm still investing that money. I'm just taking a very small portion and putting that into the money market for those dips. But for the vast majority of my money that I can invest each month, I am doing so even with prices as high as they are. To give you more of a simplified visual for you, say I have $1,000 to invest each month, 80% goes into investing in the 3 categories that I showed from before, and then about 20% goes to the money market in anticipation of a possible dip. I will say that if December comes, the end of 2025 comes, and none of these dips have actually happened, I'm going to take all of that money that's sitting there in the money market specifically for dips, and I'm going to allocate it into the market so that it's in there by 2026. With midterms coming in 2026 and a new Fed chair being appointed mid-2026, I really think the stock market will be booming and there's a lot of money to be made, especially starting that year. Let me know what you think down below, and then watch this video specifically if you're very serious about investing and you want to take that investment account to the next level. Or watch this one to keep you going strong in investing and keep investing simplified.